So now we've been over the options and how they play a role in disability, unexpected death, and now what about extended care? You know, I keep on using this word extended care. You might be wondering, what does that mean? Well, think of it as long-term care, although a lot of people tend to perceive long-term care as some older people's issue. That's not necessarily true. A caregiving situation can happen to anybody at any time. I mean, look at Michael J. Fox, look at Christopher Reeves. You know, they were basically hit in the prime of their lives as far as with things that we don't know, those life happens events that I keep on bringing up. So an extended care, and I want to be clear here because a lot of people tend to think, I have health insurance, I'm good. And let me tell you how that works in relationship to extended care. Health insurance will pay to get you back to independent functionality. What if you have something that, whether it's a disease, an accident, I don't care, old age, where you can't get back to independent functionality? At that time, your health care says, see you later. And now you're on your own. There's the shortfall of health care because it does not pay for caregiving. Whether that be in your home, in a assisted living facility, in a memory care unit, I don't care what it is. That's the big disconnect where people don't understand that health care will not play a role in that. And so when we're looking at, again, the four options in relationship to an extended care event, the first one, your income, this is where I really emphasize you got to do the math. Because for those of you that have never had a taste of what that looks like or what that means, the current cost of care today is anywhere from $3,000 to $5,000 a month up to over $10,000 a month for care, depending on how much care you need. Now think about that. Can your income support that? Now, even people that might have, let's say, assets. Tom, I've got $3 million, man. I'm good. And you know what I say to that? This is about income, not assets. Because let's talk about that real quickly. If you've got $3 million in assets, but you're pulling, let's say, $100,000 to $150,000 a year to support your family and live the life that you've wanted to live, and now all of a sudden you've got to have a $50,000, $70,000, $90,000 care expense come out of that income stream, is that going to affect your life, your loved one's life? Any of the commitments you've made to people, charities, whatever that may be, will that affect that? And I think if you're honest with yourself, you say, yeah, it does. So it's not about protecting assets. It's about, do you have an income stream that can support that additional expense and be able to take care of that loved one in the manner that you'd want and they would want to be taken care of in a time of great challenge. What about government? Well, there's three things that government tends to look upon when it comes to extended care. The first one, I will have to tell you right now, if you think Medicare pays for an extended care event, forget about that. It doesn't. Even in their handbook, they will tell you it's not a funding vehicle for extended care. Now, the VA does have some options, and you need to look into them. That's a possibility. But you have to be in the military, and to get the aid and attendance, you have to have had at least 6 months in the military during 1 day of wartime for that to be available to you. And you need to look at the limitations of that as well. The biggie, the one that a lot of people tend to end up on, is Medicaid, or in California, Medi-Cal. Now think about this. That's a welfare program. That's for people that are basically, it's their last safety net. And if one is close to the poverty line, that might be an option worth considering when we're talking about extended care. But most people are not close to that poverty line. And I want to tell you, you gotta kind of think about this. How long can government and what's going on, especially in today's world, can support that caregiving expense as we continue to have the baby boomers get aged, get seasoned, get on with their life. We are experiencing something new historically in our country that we have never had to experience before, and that is we are getting older than our previous generations ever got, but not necessarily healthy. So think about that if you're considering option 2, your government as a possible empowerment plan. Last one, well, not the last one, sorry, the third, your family. We've talked about this. I've been over this already, Sure, your family can take care of you. And if that's your plan, this is where I emphasize, do they know it? Too many times I've talked to people and I said, have you had that conversation with your kids? Well, not really. They might want to know that. They might want to say, you know what? I have different plans for my life. Maybe we should think through this. So don't just take it for granted that they're going to step in and take care of you, or they even have the means to do so. But number 3, your family is an option that can be considered as long as you have the conversation. And number 4, your funding plan. Now again, is that more empowerment or empowering than the other 3? That's up to you to consider. But if you have funding available to be able to pay for in-home care, residential care, assisted living, memory care, full-blown nursing home, hospice, if you have funding available to pay for those things, believe me, it takes the financial stress off of an already stressful situation. So I want you to think about, again, out of those 4 options in an extended care situation, which becomes, or what becomes, the most empowering to your own situation. And when you come up with that idea, then pursue it, get the willingness, do the research, and take action in putting that plan in place.